Hi guys, this is Mehmet Ali Binen. I go by Mali. This is our first episode, the Small Caps Trading Podcast. I'm with Mo. I met with him a couple of years ago. Um, we got closer along the way. We talk about tradings. It's mainly me asking him questions, trying to pick his brain out of here and there. And recently we thought, well, it was his idea really. Like, can we put this conversation to public and really share with the community what we talk about? And really we just going from there. Mo, you wanna take it from here?
Yes, sir. Thank you. So, like Molly said, that's Molly and Mo. We're both small cap traders here in the U.S. And I've been doing this about 10 years. Molly's been doing it, I'm not sure, was it 3 years, 4 years, 3 years,
Couple of years, yeah.
2 years,
Two,
couple of years. And I think I got me and Molly met each other, I think early on in his trading. I think maybe 2 years now or so. And we've had this loose, like, let me teach you what you want to know type relationship, mentor mentee. But it got very, very structured about 4 or 5 months ago, where we really, basically Mali passed the stage, where we could start to talk about the things that really matter. And as we did that, I realized there's value in those conversations to everyone, myself included, but also obviously Mali, myself included, and really everybody else. And so we thought it'd be fun to bring these conversations to a podcast format and share it with whoever wants to listen, and meet whoever wants to create conversations with us from that. Um, so that's what this is about. Generally speaking, we want to do this once a week, and we're thinking of sort of the structure for every episode is going to be going through basic principles of trading, going or I don't know basic, but general principles that we use for trading, uh, going over the market cycle and what's going on with it, and then going over the past week to see if we can note any notable moves, any notable trades, any notable setups that's worth talking about. And we hope that through those weekly episodes, we'll over time be able to cover enough ground to give people, a good overview of this landscape of small cap, high volatility. So that's that.
Yeah, exactly. I think it will be this first episode is gonna be more structural, like talking about what the podcast is about, and from there I think we can go more deep into okay, what happened this week and spend more time, like maybe ticker by ticker, or maybe some outlier event happened. We can talk about that. But I think for this episode, we're gonna spend some time on what this is all about.
Yes, sir. And so maybe without even any further ado, let's just sort of jump right into, the first thing that I want to talk about is outlining, basic principles that, I hold near and dear to my trading. Because look, we're going to talk about tons of specific, you know, action and signals and patterns and setups and all that stuff, but people get lost in the specificity and in the zoom in of it all. And so before all that, I just want to outline a few things that really help me apply the right tools to the right situations, right? So first and foremost, you have to contextualize your setups. Because you know like if we talk about, oh, you want to, like, say long something or short something, right? So in its most basic form, you can say, well, you want to, I don't know, look for a trend up or down, and then long or short it on, long it on on dips up a trend, or short it on pops on a downtrend, right? But that's not true. That's true for non-manipulated tools, for non-manipulated instruments, excuse me, mid caps, large caps, you could do that. But for example, on the very, very small caps, particularly the nanos, for example, that is exactly the opposite of how you should be trading that. You know what I mean? So first thing is really really to understand that me, for example, I'm a small cap short seller, right? So you would think that I'd look for just one or two things, one or two signals, three signals, however, and this is how I, know when to short. That's not true at all. Every setup is its entire universe. For example, the tight hold bands type of traders, where a small cap was trading sub 75 cents the day before, and then today it's the flavor of the day, and it's it was maybe at 70 cents yesterday, but today it's at a pre-market already at a buck 50, $2, and the open is about to come. Well, the hold bands on that are going to be super, super tight. So every few cents, every whatever, 15 cents, whatever it is, things going to halt up or down. And that doesn't necessarily denote power or weakness. It's just denotes that that's how this is going to trade throughout the day. And so you need to understand how that type of, whenever that situation occurs, how do they normally trade? What does actually strong look like in that scenario, and what does actually weak look like in that scenario? And understand that particular setup as its own microcosm, its own micro universe, that you have to learn all the variations of how this particular behavior can transpire, right? So that you could say, okay, well, it's looking like there's going to be a lot of power here throughout the day. I want a long dips or vice versa, right? And the way that's just one example of so many different um, whatever you want to call them, setups, right? Scenarios. And so the first thing is that I contextualize every scenario separately, and I know how to trade each one separately. So that's one of the things that they understood with Molly throughout the last 6 months conversations, and why we're having this podcast is because I realized, shit, not only is there not you know one, two, three, four, five different things that you have to know that will really help you trade. There's 500 different, and I'm sorry to say that because that's could be off the get go could be kind of demoralizing, but that's the truth. And so like every scenario, every setup is its own universe that we learn separately. And once we know one setup well, talk maybe for Molly in this situation. Once Molly gets comfortable with this setup, okay, now we can ask less questions about that. Just a question here and there when something is confusing. But we got this. Now let's move on to the 15 other setups, one by one by one, and each one, quite honestly, takes weeks, if not a couple months each. Now we don't do it all at once, but there's overlap, but nevertheless, contextualizing my setups is one of the key core components of how I trade, and I think everyone should trade because each setup is different. And so that's an example of sort of a core component to my trading. And others that I think are important to touch are so manipulated action versus not manipulated action, price action, excuse me, right? So right off the bat, and for us there, it's trading small caps. It's going to be predominantly manipulated, but not only. And the ability to understand to put those two in two separate categories and to recognize right away when one is one and other is the other, and then treat it from that perspective is huge, right? And the other core, like a basic component is, or a basic principle, I should call it, excuse me, is know what you can know. Like I don't turn on the screens and look at all the high volatility, high stuff that's in play and be like I can figure it all out. Hell no. What I look for is things that I can figure out. And I'm like, I look through the mess. I'm like, I don't know. I don't get it. I don't get it. I get this. This is what I'm going to trade. So within all of these lessons, basically, they're not going to apply to everything you see. But the trick for me anyway is to figure out what I can know and trade that. And sort of twin of that basic principle is trade what you see. If you see a trade, take a trade. If you don't see it, don't take it. You know, if you don't see the setup, if you don't see the signal, if you don't see the trigger, if you don't see that stuff, don't touch it. If you see it, participate. And that seems like sort of a obvious, you know, don't need to say it, but it needs to be said. So those are some of the basic principles. Yeah, anything you want to add to that, brother?
I think like what we talk about a lot, what I struggled a lot was in the beginning. You have 15 set up, and then I will see you like something is popping that day, and then you will send me, yeah, that's how I traded, and then I will take that. Oh, that's the way. That one answer, that one magic. That oh, I should have done that, and then I see you like you short the stuff or whatever. I'm like, okay, next time I'm gonna do that, but it's a different setup. I will short the stuff, and then the things keep going. I think that was very that's so important. That selectivity of it, that like you said, contextualize. You get like sucked into that idea, and the next day it's not that. In order to really identify, it is not that. That's like the 400 of it, or like the other permutation of that setup. And I think that's so hard as a new trader because you get excited like, oh, I got it, so you wait for the next one, but it's not that. You might wait for 3 months or like 2 weeks or whatever until that comes. And then the other psychology aspect of it, you saw that setup, so you take that, you memorize that, and you go through different emotions with different setup after that. And then once that same setup occurs, you might not take it because of what happened previously, but
Right.
you really need to identify, no, 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 that's different. I seen this, I'm going to treat this way. And I think that's really what struggled me the most. There is no one answer, there's so many different answers for so many different
Right.
plays.
So
That's why we talk a lot about it.
right. So, for example, I'll give an example to what you said you've gone through, where you see me talk about a concept, and then the next day, the next week, you see something that's sort of similar to that. It's not exactly that, but you didn't fine tune it enough. So you're like, hey, this looks similar to that concept. I'm gonna just say it's that concept, and I'm gonna trade it that way. And I'm like, Molly, no, it has to be exactly that. So, for example, I'll give a real example. So the day after Black Swan, right? Love those days. Like small cap Black Swan happens. The next day we get very transitory volumes across a bunch of like one and done pumps, right? And so me and Molly talk a lot about I remember the first day Black Swan that happened. I told Molly, watch tomorrow. You're going to get a ton of runners, and they're all going to be one and dones. So they're going to be great longs and they're going to be great shorts. Be ready. And we talked about the psychology of why that happens, and that's great. And then someday and we did get a bunch of day after Black Swans ever since that one. But in the beginning you would miscategorize other days as a transitory volume day or a day after Black Swan day because it was similar to, but it wasn't that. And then you came with the expectations that it'll be easy longs, easy shorts, and it wasn't.
Yeah.
Right. So that's sort of a real world example of
Yeah.
you know trying to make something what it isn't. And so really the trick is, I mean, there's lots of tricks, right? But like knowing really well each setup, and in this case an entire day can be a setup, right? Because the day after Black Swan we sort of know how the behavior is going to be across many random vehicles. So knowing the setup, but knowing to just religiously apply them when they are correct, and not just because you learned something neat and you want to just now throw it on everything and see where it works. So that would be, I think, an example of what you were talking about. And
Yeah. Yeah.
correct. And this is a lot of work, and so no shortcuts here. And that's the ugly truth is it's going to take time, a lot of work. But me and you've gone through a lot of it together, and we're gonna share it here for whoever wants to listen. Um,
Yeah.
anything else you want to talk about before I go to the market cycle part of it?
Um, I guess um, that after Black Swan days, that is me expecting it because now I realize, but they don't happen that often. So whenever I see those runners out of nowhere, I was expecting, oh, that's transitionary rolling. I think another example that came to my mind was knowing when to carry something in the open and when to cut it before open and treat it differently. I think that
Right.
was another example. I see you sometimes. Yeah, I'm not carrying that into open. And then I will treat it like religiously. I'm not carrying anything in the open. And then next day I will see you carry something in the open, and then
Everything into the open.
I'm like, what? I didn't carry. That was a rule. So there's no one rule. I can just apply everything into just, oh, I'm not carrying. It's so many different
Yeah.
permutations of it. So, but yeah,
Right.
you can go
Right.
ahead. I just wanted to share that right before
Right.
that came to my mind.
Yeah. Great example, and there are so many. So without further ado, let's go to the market cycle section of this podcast.
All right.
So today the market cycle section is going to be super short and not much to it because this is the first episode. Honestly, I wasn't ready with all the things, but uh, what I do want to talk about in every market cycle section is let's talk about for a second in general, right? What is it even? So the way that we look at market cycles in small caps, momentum specifically, what we're really gauging is the amount of activity and volatility, and that tells us, what we can expect, sort of what kind of action we can expect, right? So what I mean by that is when there's a lot of inflows into the small cap speculative Momo stuff, then we're going to have a lot of gappers and a lot of, and you know basically we could just simplify it and say we're measuring how many gappers we have each day, how much they are gapping, and how well are they holding their gains throughout the day. So those are the three metrics: how many gappers, how much percentage are they gapping on, more or less, and how well or badly they're holding their gains throughout the morning and the day. So when you have lots of gappers, they gap a lot and hold really well, that's the strongest possible market cycle. But you have different market cycles that are also strong. And the strongest one is amazing environment for longs, awful environment for shorts. But you have different variations of it. It's not always, for example, you can have lots of gappers, gapping high, not holding gains at all from the morning. That is a terrible environment for longs unless they only trade at pre-market. And it's a fantastic environment for shorts because you have a lot of meat on the bone and they fade. And you can have all different variations of these three variables, right? You can have not a lot of gappers, gap a lot, and just chop throughout the day, really consolidate. That's crowdedness, right? That's the conditions for a crowded trade would be. And so there's many different ways in which these three things can come together. And that's what we are going to talk about in future market cycle sections. And I'll come with the numbers, right? How many gap? I'll have it all quantified. For today, I don't have that. I But I just wanted to bring up the concept, the section in our episode, and we'll have that ready for you for future episodes. Any thoughts on that, man?
Well, I think cycles were so like crucial for me when I really started to, because you were telling me big picture. I will ask you price action questions. Oh, where was the spot? Where was it? And then you're like big picture. Well, what is cycle? Is there a theme? And then you send a couple articles. That was so crucial to really get what the big picture is. Like, what is the expectation? Do I even know what am I? It's like a fight. Like, what type of fight am I gonna get into today? Was there what happened yesterday? That is so crucial to know expectation of the day, like what cycle are we in, what is happening, and then I can position into that. That was like the first step. Okay, what cycle are we in, what is the big picture, how am I going to play with it? And I think it will be really helpful for still for me, for all the people really understand what cycle means. That's like the first thing as a big picture, and then you can expect, because really cycle is the beginning of those questions. How are you attacking it? Sometimes weak cycle, all right, I'll start front side, whatever. If they're redeem, I'm not doing front side. Things go 500%, 1000%, and then if you're a cycle, things only run 100% max, and yeah, you can be more aggressive into them. But really, you don't get it until you really see the big picture. What's happening? Oh yeah,
Correct, correct, 100% correct. And one way that we applied that in in real time was when, look, so it's a little bit quieter right now, this past week, but I remember about 2 weeks ago, whenever it was, the cycle was really, really strong, and we had all three pillars of the cycle sentiment as strong as can be, and I was camping at the time. I was lucky; I wasn't involved mostly in that. It was just pure luck, but I think you were trading it and you had a little bit of a tough time on that day. And I looked at it and I said, bro, we have tons of gappers. They're gapping a lot and they're not giving up. That's great because it doesn't just plunge all the way to like from all three pillars maximum to all three pillars gone. Typically, it slows down from like the last pillar, how well things are holding throughout the day. That's sort of the first one to go, and you do end up staying with for a very brief time, a day or two or three. You end up with still a lot of gappers. They're still gapping significantly, but not holding well. And I remember I told you specifically. I said before that pillar changed. I said that pillar is about to change first in like this week, in a day or two. And we're going to have lots of gappers gapping up, but not holding. I think it's going to be big opportunities there, and I'm going to get ready for that. And I was, and that's not hindsight, that's foresight. We talked about that before. And when those days came, I was there. And so that's just one example. But yeah, there's it's the whole thing about learning how to trade. Like I said, contextualize setups. It's not just setups, it's everything. It's understanding all the variables that are in play from market cycle to set up specific uh, um, you know variations, and putting it all together. And that's why no one or two or three tricks works, because it's constantly what's the dynamics and what can I apply to take advantage in this particular dynamic. And so that's why there's no magic trick that helps you make money in small caps. Um, but I do, we have been going through all that, and we're going to go through it. I mean, me and you personally, privately, and we're going to put it all out here, and we'll see how it goes.
Yeah, I want to say about the one thing that how cycle can mislead to traders, because it did to me when I was really
Mhm.
trying to figure out if let's say, like, I want to give example of PHN when the Trump stocks were running like DVAC and then they were running together.
PHUN.
PHN. So if you don't know, if you're not aware of the cycle, if you're not aware of the dim, if you just treat that as a just day one gap or you think it's gonna fade all day, then you're gonna get trapped. You're gonna get those short traps. You're gonna get those sub up, and then you will have no idea why it just claim out of nowhere. Then you're gonna be like, oh, this setup is not working. This setup is not for me. And then next time on a week cycle, there's gonna be a day one gapper, exactly same setup. There's no dim, no high IO. It's just fluff news. You're expecting a fade, you're gonna be afraid of it because you couldn't identify what the cycle then and then what the cycle it is right now. And I think that's why it's so important to know, like, how are you gonna expect this thing today? Is it even a short or long today? It's probably a long today if there is that of a huge theme is going on, and cycle can be really misleading if you are not aware of it.
Right, and all these nuances is I've never seen this in any course. I've never, like, in courses they teach, just they don't teach when. Great, they all teach things that are applicable, but they don't explain
When?
where they are applicable and where they look like they might be applicable but they are not, and all that stuff. That's where the rubber meets the road. That's the hard part. So we'll go through that stuff. And again, so in our normal episodes going forward, the next section after market cycle is going to be looking at the past week and stuff, and I do have some stuff ready from the past week. um, and so we can actually go ahead and jump right to the next section and start to look at at action and start to touch on some nuances. What do you think?
No, let's do it.
Okay, so no particular rhyme or reason to what I want to show. I just looked at a bunch of um, things that happened over the last week that I thought are, caught my eye. And so I wanted to talk about them. And through talking about them, I wanted to, um, bring to light things that me and you talk about. Now, nothing here is going to be complete. We're just going to touch on a bunch of different things. But I want to show the difference. So, for example, me and Molly, we talk a lot about the algos, right? And there's so many different concepts when it comes to algo, right? So, for example, I remember this day right here, right? So let me zoom in because I know I got a lot of information. But MTC on was it must have been this day right here, right? Yeah. So I remember this day. Me and you were trading together through WhatsApp, right? And all of a sudden, MTC came. Right now, we had sort of like so MTC was over here at 1 second. All right, cool. So you could see sort of this little random push over here. Pre-market shouldn't have gotten too much of your attention. You could have missed it easily, no problem. Then it starts, to trade over here in the what is this? The 115, $1.50. And me and Molly have this concept. Everybody in small caps has this concept of looking left, right? And if this didn't happen yet, right? We were still here. So if you were to look left, you were to see sort of like the 275 area, and you're being like, oh, that's a potential looking left. Obviously, there's that, but that's, it wouldn't have been reasonable for you to assume that it will go there. You look for the more reasonable stuff. So you would have seen sort of this area, the 220s, and you'd be like, nah, probably 270s. Not that that was a hard looking left area, but just trying to set the scene for what would be in your mind, right? And then, if we zoom into the volume, sorry, I think my thing making noise. Let me turn that off. There we go. It should be good. Let me make that silent. Sorry about that, guys. We're good. So, going back to it. So at 11 a.m., right, all of a sudden, out of the blue, we started getting what would be, my recollection says 700,000. Yeah, we started just getting 700,000 candles on the 1 minute consistently. 700,000, 700,000, 700,000, 700. You see it right here, right? And you see the volume go up. And sure enough, 270s, whatever, would have been right here, right? So sort of the first area where it started having difficulties was the 270s. And what I was telling Molly at the time is, yeah, I see the looking left, but do you see the volume, right? And what I was telling Molly is, at the time, I was like, an algo just came in, like 700,000 consecutive volume candles literally out of nowhere is an algo. And at 11 a.m., when they're coming in, I said, Molly, there's an agenda here. I couldn't tell you what the agenda is, but there's an agenda here. So I don't care about any looking left level. What I want to see them is exhaust their agenda. And, I don't know if that stopped you from being tempted to hit it on the looking left area or not. But then you asked me, okay, so what are you waiting to see? And I said, well, in this particular example, in this particular setup, what I'm waiting to see is an over $1 million volume exhaustion candle at the same time as a price push exhaustion. And when I see that combination, I'll look for the next higher low after that to get involved, which is exactly what we got, right? We got that and my apologies for the resolution, guys. I'll figure it out, but we got that right here, and then I think both me and you hit it right here, and and that was lovely, and it started to fade from there, but then it came back, and I want to talk about this as well because the concept that we're talking about right now is identify that an algo is in, identify where they are in their agenda, and join them. So that means if it's early in the agenda, join them long. If it's late in the agenda and you see the exhaustion, join their selling and get short, whichever, right? So that's sort of the first thing that we could take away from that. But then the second thing that we could take away from that is this action right here, which we're going to come back to. So, you know, me and you, we got sort of lucky, I guess, and we hit it at a technically at a wonderful place. But still, it came back. And the other very common trait that we see algos do is this fake ass bull flag that sort of, you know, oscillates tightly in a range and looks sort of tempting for longs and scary for shorts. And this is only applicable for algos when you know shorts aren't involved. So again, contextualized. But I'm going to show you a bunch more examples of this so that you can know. First of all, don't long this ever. And well, I don't know about ever, but and this particular thing, it's to me, it's these are such great shorts. And so I want to show a few more examples of this thing right here, right? So this is edible, which is a real nano float. These two are the same thing. This is just zoomed in. So here you can see the whole day, you know, where it went from whatever it is, 3 to 8, you know, and these two things are these two things. And you can see, you know, faded VWAP came back strong. Looks like a bull flag. You know, if you just, you know, if you're looking at this live and you're in this candle right here, you don't see the rest of the future yet. This looks like a bull flag, you know, but in the really, really small cap algos, they make it look like bull flags on purpose to trap longs, and then they flush it. So, you know, so recognizing that over and over and over again, right? This is from just from yesterday, from Friday, you know,
Yeah, yeah, I
and,
traded them.
this is right here, right?
Yeah,
And this is I just put the whole context over here so you can, you know, this is this, right? But you know, you see this right here, and this seems like sort of a random thing to talk about, but as far as algos, I think understanding agenda and where they are in the agenda is crucial, and then understanding what it looks like when they're getting exhausted out is crucial. So that's one thing I saw this week. Um, Before I go on to other things, is there anything you want to bring up on either these particular ones or algos in general?
I have a question actually. Or can you zoom into that the top right one? So in real time, I was thinking same thing. I got short at that place, but I thought there was another kind of bull flag ish at that. You know, after 10 a.m. it kind of fade a little bit and then breaks the highs again,
Mm-hmm.
where your mouse is. Um,
Right here,
so
yeah.
at that moment, my reason to not get short was it didn't run enough. But what will you say if somebody will ask you, "Hey Mo, that's a flag too, but that one worked. How do you know you are wrong? Like, how are you approaching that? Why it is not a short there? That's a bull flag too."
Right. Um, that's a great question. Um, so you're saying this to you looks like this, which is true, by the way, right? So if
Except
we
percentage
if
run and yeah,
right. So um, wonderful question, and it's exactly why I actually brought this particular one. You can see that I have the full day, the zoomed in, and the 5 minute of the multiple days before that. But and I'll answer your question through that because this thing came from 60 cents, right? And it ripped. You know, it went from 60 cents to a buck 50 over here, and then became a multi-day runner and blew off at $3, and then faded for a couple of days, then came back for what seems like one last hurrah, really, which was this day. And so you don't just get short willy nilly anything anywhere. Like the whole conversation was, it's not just okay when you see this action, it's a short. It's in combination with other things, and throughout the weeks, we will try and bring all the variables together so that you can really take actionable trades, and so that's a really wonderful question, and it's why I have this map, this chart right here, because I mean this was this was a short always. It's, it came from 60 cents on a potential reverse. It's on a potential reverse merger news. It's a 2 million floater though, so it can move, and that's what they're banking on, right? Like the manipulators here. So if you had just looked left into its big day, you would have seen, the clear level here. And if you had wanted to get short, basically here is what you're saying. I don't know like exactly what level on the left you'd be doing it against. And so you're blessed to have this on the left to show you where inventory is, so that you can see when all the stars align. So when you basically, it's a very long way of saying that when you saw this happen, if you had looked left, you would have had not much to really correlate it to give you a lot of confidence as far as, oh, I have this aligning and this aligning and that aligning. You wouldn't have too many things aligning. You just have sort of this odd, potential algo exhausting action. Whereas here, you would have had that too. Plus, if you look left, you would have seen this. And so that's really the difference. Is that enough to, give you confidence to go all in, make a, probably not, but it's something. You know what I mean?
Yeah, yeah, yeah.
And I looking at this, me and you play a lot of games of, I mean, I wasn't trading yesterday, as you know, but me and you play a lot of games when I don't trade. It's like, hey Mo, how would you have traded this? And sometimes I tell you, look, man, I would have shorted it here, and I've taken a loss here, and I do this. In this case, I'm, who knows? But I'm pretty sure this is where I would have gotten short. Any other questions on this?
No, perfect. I just wanted to ask because I kind of figured that will be the case, but for the people who is also watching, I think that this was a very good example of when we talk about there is no one answer for one particular situation that you can apply everywhere. This was a contextualizing example of, yeah, bull flag is sometimes short, but like where are you shorting and when are you shorting in, and do you have how many confirmations you have and in what context? I think this was a good example.
Right,
So yeah.
right, 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 right. Yeah, and so that's it. Now let's. We had some channel liquidations. This week, we had MFI, we had YYAI, MNDR is going to be the next one, whether it liquidates from the $24 where it's trading right now, or whether it goes to 40, 50 and then liquidates from there. I don't know. China's, I actually I can't help. I don't trade them. I don't know how to trade them. I don't, it's next level fuckery, and it's not for me. But I wanted to put it over here regardless, just because a lot of people do trade them, and b, they are events, and they did happen this week. So I just wanted to sort of put it here as the two examples this week, and point to MNDR being the next one. Any questions on this?
No, I was surprised you even brought it up because yeah, I know you don't trade them and I don't understand it either. When I look at MFI, I saw it was gapping down to like $3, and I don't really tend to long much. I'm like, this is probably a long. I'm like, is this gonna
No,
who is like shorting from 9? And some people probably caught those. They got to cover. I'm like, they got to cover. This could go to $4. I'm like, Molly, no, I'm not taking it because I'm so horrible at long. I'm like, this is probably gonna fade because I think it's
also, also, sorry to cut you off, but channel liquidations are never longs at any
yeah.
price.
Sometimes how they trap things like limit down, and all of a sudden goes limit up again. That's what I was thinking.
Right, right. You were thinking it's the fake liquidation, right?
Yeah,
Because they
yeah,
do, they do. The game is so obvious that it's not just a reverse psychology game; it's a reverse psychology game.
yeah,
Because the
yeah,
way,
exactly.
because their little boiler room people know who all the shorts are, and they text the shorts saying long it here, because they want the shorts to think that they are, it's such a reverse psychology mind battles between the shorts and the boiler room operators of this, that it's just, and some shorts have figured this out. I know some shorts that figure this out. I know some shorts that were, for example, short MFI right here, and I don't know how. I don't know how. But I brought it up because it exists. It happens. substantial in its results. So that's really it. But I don't know that I have a lot of value to add to that. Um, of course, the number one um, setup that most of us play in the small caps is the day one gapper, right? So the main setups are day one gapper, multi-day runner, um, mid cap squeezers, dilution events, S1, regardless of the type of dilution, but particularly S1 being sort of the king of that. So those are the typical setups that we see, day in and week out. And so this week we saw a few day one gappers. I'm gonna run through them really quickly and then focus on each one. So AMST had um, 1.5 million float. They had on its day one. It was we're launching a beta app for nurses with AI tools. There, if you go and check out their PR, it's a lot flashier than what I wrote down here. There's a lot of buzzwords. I just cut all the buzzwords. But that's sort of the game on the day one. Because I mean, they're like here. Let me. I'll pull it up. Let's make an example out of this. Okay, 1 second. Um, so their PR on that day read, um, Amistite launches revolutionary Nurse Magic trademark app in beta to empower 5.2 million nurses with AI tools. Now let's strip the buzzwords out of that, and it reads launches beta app to empower nurses with AI tools. That's the actual PR, minus the buzzwords, right? But revolutionary, 5.2 million nurse, all that stuff is to say, hey, buy our stock, buy our stock, buy our stock. But I mean, if you cut the fluff, then most of these PRs are nonsense, right? But the thing, nevertheless, even though it was nonsense and went from like, $1.70 to, $4 and change, like a doubler and a half or whatever it was. And so we had, and I'll go through them in more specifics in a moment, but let's just see what they want setups I have here. So we have AMST on its day, and this would be this day right here. Obviously, this would be the day one, right? We had BDRX. This was just yesterday, Friday, right? We had MLEC, which was a 4 million floaters, becomes first company to achieve USDA approval for plant-grown animal protein. Cool. Um, Went from from $1.50 to $3 and change. Again, a doubler and change. And so that's just that's I didn't take a lot of day one gappers from this week. I don't know how many there were, but here's the three. And the way talking about day one gappers, the game could not be more simple. It's stupid simple, right? Like day one gappers, they either top in pre-market depending on the pre-market behavior and volume, or they'll top somewhere between 9:30 and 11 a.m. Uh, about 70% of the time. So really, the overwhelming majority is what you see here: huge volume off the open and a fade, right? BDRX, all the volume and the action was in pre-market, then a fade. MLEC, same thing. Actually, a combination of both of those: topping action in pre-market combined with big volume off the open and fade. Now, they don't always work like that, right? There's variations to how they work, but and these were showing all examples of ones that just work, that just faded off the open, which looks cookie for shorts, like super easy. But they don't always do that. But this is just the example of this week, so it really shows you a little bit of the cycle and where we're at in the cycle, right? But B, even when they do reclaim, that should be sort of easy for you to figure out, right? Because if you know that the majority fade, by 10:30, 11, or sorry, the top is in by 10:30, 11, then if you're coming into 10:30, 11 and it's about to break, higher days or pre-market highs or both, then that's the 30% of the time, right? That it doesn't, that you don't know where the top, when, right? Not just when the top is going to be time of day wise. So that's an easy, cover if you're short, or long if you're, want to get long or stuff like that. So just generally speaking, day one gappers, it's the most common one and also the most simple one, um, in my opinion. Any questions?
No, like what you said, things are working so. You said simple, and they are actually working so simple, especially this week. Really, gapper pre-market volume, it either top 930 whatever, and then just fades. And the action, like when I really get into the backside was my first thing because I wasn't really experienced how to really deal with things on front side. I really got good at the backside of things, and this week when we were talking, like things just die and they just fade, not even like decent bounces or reclaims. So I forced myself, okay, I'm gonna put some on the front side to understand. I've been doing this for like I think last month or two. So this week was probably the most obvious and like easiest one. Things have maybe I got better because we talk a lot on the like how pre-market the tapping is before 11, but really I don't know, when you tell me a lot when shorts gets too aggressive, that's when the black swans happen. Week cycle, week cycle, and then things just get out of nowhere. I was gonna ask you, is this a too manipulative thought to think we might get a like some huge shift soon?
Great question, and I actually saw a lot of people bring exactly this topic up in Twitter over the last couple of days, and I tend to agree with both you and them. Yeah, like things have been working splendid, and shorts are, I'm sure, aggressive. And yes, I do think that that aggressiveness will ultimately culminate in a great squeeze something somewhere. So yes, I agree. The only problem with that is, and I'm not sure how much of a problem it is to this thesis, but the let me add a couple things. The overall market, not small cap market, but market is looking scary. I would want to be absolutely risk off in any real instruments right now. Like feels like we're going towards a bit of a market turmoil in the short to mid term, and so you would think weakness across the board, but it's been my experience that whenever weakness comes to large caps, strength comes to the small caps. And I think the reason why is because people like when things are working really well, when the general market is strong, a lot of players that know how to play both the small cap and the large cap, they'll focus on the large caps because it's easier. It's what I mean. You could employ much more capital, and those are the folks that have a lot of capitals to employ, and so they just rather do it there. But when things go south over there, some of those players that are two-way players, they play small and large caps. They'll be like, okay, whatever. I put my shorts onto the market. Now let me come in, make that fast, easy money. In the small caps, I'll push this or that around and make a quick mill, a few mills, right? And so there seems to be that reverse correlation sometimes between large caps and speculative small caps. And so I don't know what'll happen. But if you combine general market being weak and small caps being really really cookies for the shorts lately, I do see a world in which we get a black swan pretty soon, and then some action off of that. Of course, that's wishful thinking. I want that, and any number of other scenarios could happen. I don't have the level to really dissect large, like to anticipate cycles like quite like that. But that's my thoughts, and I would love for that to happen.
Yeah, yeah. Well, I mean, I think it's good to think. Obviously, I'm not gonna change the way I think because I'm gonna expect something it's not even happening, and I will just not put short. I will trade it. Just I guess something to keep in mind if something is really going. You don't not to fight with it, not
Right,
to.
but the black swan is going to happen. It'll have all the signs of a black swan.
Yeah,
It'll take out pre-market highs. It'll take out high of days if those are different. It'll make new highs after 11 a.m. You know what I mean? Most likely it'll be a sub 5 million floater. So all the signs will be there. You know what I mean? So there's
Yeah, yeah,
no reason. I saw like there's no reason to get scared and not trade anything. Just know what the signs are, and
yeah.
broadly speaking, as we do go over these setups, I do realize that we're not. I'm not going into every setup and saying, oh well, the entry should be here, the entry should be here. I'm just sort of going through the action of the past week. In future episodes, we will choose one setup. We're still going to go over the action of the week, but we'll also choose one setup and deep dive into that setup. For now, it's just sort of a weekly recap. So before I go into overviewing some of the other movers of this week, any questions about the day ones or what we just spoke about?
No, I think I kind of went over with you. It was just
Cool,
simple,
cool, cool.
simple action.
Yeah, simple. So other stuff that I saw was, I saw BOF was a day one gapper, and then on Friday I saw that one of the larger Discord pump rooms was all over this, and so you know the act, that's why you see like really random action over here. But what's noteworthy is, quite honestly, this is a day one gapper over here that should have died, and so then pushing it over the highs of here, right, and squeezing whatever shorts might have been swinging this, and sort of failing to do that, failing to really do what the cool kids on Twitter like to call liquidity play, right? What is that they call it? The liquidity play, liquidity trap, right? Liquidity trap, which is when shorts get involved on a high volume day and it never really gives them the swing shorts and out, and then comes back on small volume and presents a problem for them to stop out now because the liquidity isn't there to stop out in their sizes, which should send this flying way past where this went, to be quite honestly with you. So to see that is, in my, like, again, if I was trading, I'd probably be, personally I'd be all over this because it doesn't seem like much, but the big failure, the fact that it was the large Discord pump room, and I'm not going to name names because I'm not going to get into lawsuits, but the fact that you saw the major Discord pump room all over this, and the fact that it got over here, but never really was able to create the squeeze that you would normally see on a liquidity trap setup. That was all the short confirmation I would have needed. Um, and air.
Let me
Oh, so
ask
we
you
got
something on that BOF, because to
yep,
me, like when it, like day one gap where it should have faded, it's not fading. I
yeah.
don't, I don't really know. Okay, like this either goes huge, like SOEN type, just go go go, and then I will get the backside on the daily. They try. So by the time to me, okay, they couldn't. This is short. Is where is that? Like if you go to that 1 minute chart, they break that and then they stuff it into the lows 230s. No, no, like right
Uh,
here, right? They fail.
Give me time of day.
Literally like at that 1 p.m. flush.
Okay, here.
Yeah, right there. But at that point, I'm like, I'm already too late. I didn't like the daily. I don't know why it's there. I don't know what's happening. So I don't want to be involved there because I don't have that much confidence. And
Yeah.
by the time it reaches there, I'm gonna be like, what is the risk reward here anymore? Like, is this even touchable?
No
So
meat on the bone, right? So I understand that. Let me give a couple of notes.
mm,
First of all, I get it. I see it. I don't think this is a banger trade. I don't think there's a humongous trade here. I don't think this was like and so I tend to agree with you. But what I sort of wanted to point out more than that is because, like you said, you're a backside kind of a dude for now. You feel more comfortable on the backside. So oftentimes in the backside, there's less bone, less meat left on the bone, and it makes like finally the trade is going in the direction I want it to go. And but now shit, I don't know that I have enough risk reward. But again, this is not a setup that I'd like to put too much focus on. But it's just the confirmation was here, not here. Like because I'll show some next week. I'll show some. I'll try to remember to show some liquidity traps and how they work out. But when they work out, you try to compare this to SOEN, but it's wrong. You should have compared it to OCEA. And if we bring up OC, we see what a what a liquidity trap really looks like.
On float,
Right,
float, right?
right. You'll have the day one action, then you'll have this sort of consolidation. It doesn't let the swing shorts out, and then it doubles, triples from there. So if this would be a liquidity trap, it'll be at $5-6, to be honest with you. So the fact that over here, as it was trying to essentially trigger the liquidity issue for the shorts and failed to do that, that was all the sign I would have needed to see this. And so I would have sort of gotten involved. Honestly, this chart is so choppy and random that I don't know where. Maybe I'd wait for the liquidity pockets over here. Maybe I wouldn't. But here's what my mindset would have been. As long as it doesn't really, go over three or a real area, I'm not worried, because
Oh,
think about it in terms of I'll compare it to the tight halt bands, right? In the tight halt bands, what we talk about a lot of the times is like, look, if there's going to be strength here, you're going to see a bunch of up halts, right? And sometimes we have something that in pre-market we know it's going to be a tight halt bander as open comes, and we're sure that like as soon as open comes, we're going to see a few up halts, and we don't. And when we don't see those up halts on a tight halt band setup, we know demand is just not there. And so you could play pops, you could play strength, right? Whatever strength it might muster. That's the corollary here. You should this should trigger something that it's just not triggering. And that in and of itself is a signal at this point. And in this particular one, it would have been my signal, but it's not a huge one. It's just sort of just going through what happened. This week wasn't a huge week. You know what I mean? So just going through the action that was there. Um, any questions on that?
yeah, got it. So you were just playing kind of the you were betting that okay, if it goes over three, I will get around those. And like it's yeah, you were playing more than the
Well,
name.
you know that the Discord is pumping this. You know that the Discord group is pumping this. So you know that this is long loaded, right? And like the only way that this continues up when it's just long crowded is if shorts are in trouble. And you just don't see the short squeeze happening here. So if you follow the Discord chat, you see that it's long crowded. You don't see any short sweating. So really this has one way to go. You know what I mean? It's a binary. To put it in the most simplest term, it's just like the the tight halt band setups being a very binary situation. This is also a very binary situation. Either this goes and it goes $4, $5, $6, or it doesn't, and you're gonna see it. You're gonna see it. At like a buck 50, a buck 40. In 2 days. That's that. But you're right. Not a lot of meat on the bone there. Not particularly a noteworthy trade. Just something I saw. We had a couple of first red day setups this past week as well. Which the first red day setups is like a really really strong day. Ridiculously strong day, which was this right here, right? Followed by more strength into the extended hours. And then all the air comes out eventually. Like this is the first
Yeah.
day. You can see the second day continued going. So we had that on air. We had that on f. No, did I not have another? I know I had another first red day somewhere. I don't see it. Anyway,
Uh,
so we had the first red day over here. Um, we had a few. I'm just gonna go scroll through this because this podcast is already too long, and I don't want to get too long. But we had a few looking left situations, so you can see FCUV. It had sort of that little pump test over here, and then they came back to it with that stupid PR about the spinoff, and you can see that it just took out um, highs were like at the 50, so it went to like 55 or whatever, and you see that same behavior. Here comes our friend MTC again. The we looked at it earlier in the podcast on this day. You can see clearing out the looking left over here and coming. And I mean, there's a few. there's some a midday run or a few S1s, but I just I don't want to make this podcast too long. So just to generally talk about this week, meh, it was weak. You had some decent setups, more for shorts, less for longs, to be honest with you, and that's really it.
Yeah, yeah, we have 1 hour. I think it was good for first episode. And
Yeah, yeah.
you wanna call it?
Yeah, I think we should call it here, and then come back next episodes with a proper market cycle section, as well as a deep dive into a single setup in every single episode, on top of the weekly review.
All right, cool. Well, I will see you guys next week with the next episode.
All right, all right.